For me, I get motivation from the Grant Cardones, 100 times from Rob Beards. I get motivation from those guys because there's a reason. The reason why they're pushing that message, they're selling their book, okay, or selling their course, or they're raising money. But they're out there. They know the potential, and they know the Burr method, okay. And they got some other strategies, buy and hold, because they're not gonna go in and meet with your guy that you were talking about, the analyst, Burton.
Bill.
Mm-hmm. You go and he's like I would look at it, they're like master appraisers, and they look at an area, and they can identify, or they say, look, man, it's been doing this for 10, 20 years. Okay, I don't see it changing. Interest rates are this way, and sales are at this rate. That is the market. And so what I see is like, look, it might come off like I'm blowing smoke, but I like to have examples, right? And so and like case studies or examples, experiences. But if I have that experience, I think it's across the board. I say it's relative. If I'm having this experience in Baton Rouge, there's a similar market in Lafayette, okay? Baton Rouge is around 250,000-ish, more or less, whatever, growing or dying, whatever. And so Lafayette I'm in Lafayette, and so it's about 150-ish, 75-ish, okay? So if I can operate in Baton Rouge, I had the confidence to operate in Lafayette, okay? Because I lived there and I was having so much experience. I'm like, okay, I'll try it. I'll try Lafayette, and this was in 2021, okay? And then in 2020, I was thinking that in 2022 we picked up 2 assets in Lafayette, one in April and the second in August, on what we deem versus our experience in Baton Rouge is one of the worst streets in Lafayette, and we've had success, okay? How do you measure your success? Well, I measure the success on what the appraiser appraises my property for, and the revenue I can pull off of it, okay? How well the asset produces, okay? And so an example of no money down was not the first one I bought in Lafayette, the second one, okay? Because I was confident on the rent market, the rents that we were getting. And like we previously discussed, okay, a 24-unit complex, 12 duplexes, okay. It's operated by a third party. I won't say any names, but it's a big third party firm, okay. But they don't have the same incentives, okay. And we pick it up for $705,000. Okay, it's an old operator. He actually built these LIHTC properties back in 15 years ago. Okay, and we're coming in, and he has to put some money into these assets. Okay, and it's not being managed correctly. We get it for $705. Well, this is in August. We get it for $705,000. It appraises for 1.1. Okay, we have a business plan that we put together. We present to the banks. Okay, and we're, as you get into the business, what happens is your business plan evolves. It gets better. You learn different strategies, different tactics, and then different strategies. And so we implement our strategy. Okay, and it appraised for 1.1. We put 100,000. We had that construction loan, and 15 months of ownership. We have, we're figuring it's got to appraise more just off the gross revenue. We're running our numbers on, man, if the cap rate is at 8.5, 8, it should appraise over 1.1. We got it stabilized. And whenever we get an asset stabilized, what we look to do is, okay, let's restructure the debt. Let's make sure we got all our monies that we need for remaining units to renovate. Let's make sure we got our debt structured, and then we'll move on to that stabilizes the asset, and then we return some money to our investors, and let's go move on to the next acquisition. Okay, well, the way we got into this deal was we didn't have to put up any money. because the purchase price was at a certain amount, and the appraisal came in 25-30% above that. Okay, so the bank just gave us all the money, and we have a book of business. Therefore, that was a bit of it too. Okay, we sounded like we knew what we were talking about, and they had the bank owns other real estate in the area, so they understood. That was the confidence. Okay, but we were able to do it. You're able to do it because of the demand in the area. That's why you got the appraisal. Okay, so they believed our business plan. So 15 months in of operating and stabilizing the property, the appraisal just came in at 1.7 million. So in 15 months, okay, we created, in the eyes of the bank, and in the eyes of the appraiser, and now the bank, because that's how the bank looks at everything, and we created 600 to 800,000 of equity. Okay, I play the equity game. Okay, what do you do with that equity? Restructure it, get your line of credit, allocate it on an annual basis, okay, as best you can. Annualize your access to that equity as a line of credit, okay, and then we go on to the next one. But that bank will loan me another 200,000, possibly even more. Do it again, and so that's one example of no money down. Okay, a second example. As we buy these multifamilies, I got these. We're upping our network of the real estate agents to showcase us deals so we can look at more. But I continually stay in the market on buying single family homes and rentals. So I got a healthy network on that end, and then I keep the banks satisfied. I got 6 banks now, that we work with, and each bank that you work with, like in a book of business, when you start buying them, using the debt to buy those, they can loan you up to $2.5 million. They want to, and if you make it make sense to them, they'll give you $2.5 million. Once you go over that threshold, it's always got to go before the board, and they're gonna scrutinize things harder because the auditors scrutinize them more. Okay, right. And so, but another example of a single family home rental. Okay, we got wholesalers send us deals all the time. Well, a wholesaler came to us, and they're like, we got this 3-bedroom, this big 3-bedroom, 2-bath. Okay, I think it was 1,300 square feet. Okay, and they want we think it'll appraise for 95, 100,000. They want 70,000 for it, and we're like, okay. Kobe comes to me, my business partner comes to me, which is my older brother. He's like, what you think, son? He's like, dude, this is a higher class area than what we're dealing in. These higher valued houses. A well-built house, thinking it'll appraise for 90 to 100,000. We'll offer him 55,000. I said, how much we need to put in. He said, probably, honestly, he said, I had Manuel go look at it. Probably just, they already got a tenant in it. And excuse me. And he said, maybe 10,000, do a new roof and kind of clean up the inside. I hadn't seen the inside. And I said, all right, good, let's go. Because I have a line of credit, and I constantly buy and I rotate it. Okay. And so we decided to get into negotiations, send a letter of intent, talk to the wholesaler. We come back, we go back and forth. Where we pick it up for $62,000, pay the wholesaler commission of $5,000. Okay. Well, we get the appraisal in. The appraisal comes in at $155,000. I go to the bank again. I got to put no money down. Okay. And so, but I'm paying a higher interest rate than what I'd like. But I'm talking to 2 banks now. Okay. And this is just that's the benefit of dealing with a bunch of banks. Some banks just want to, I got a great relationship. I know him personally. He's a drinking buddy, I guess you'd call him. And he's like, all right, I'll finance the deal. And I got this new bank that all they want to do is term out construction loans or do refinances. And so that's so we picked it up, and then we don't have to put money into it, but because it's already being rented. But I got the opportunity to fetch some of that equity from $67,500 to $155,000. So if I put $20,000-$30,000 in, and that was before I put any money, as is $155,000. So if I put some money into it and turn it into, because we've been turning a lot of our 3.2s or 3.1s into 4.2s, okay, because we get a little bit better rent. And when you get into these properties, the best time to renovate them is whenever that you're turning them over. You turn the tenant is moving out. You do everything you can do, okay, and so we've been having a lot of success with that. So there's two examples, one on the multifamily side with no money down, and one on the single family side, no money down. And so that's those options are out there. And what I try to convey to my audience is that it's the best time to get into real estate, but it's very hard to do a deal with leveraged money because everybody's high on 2022 prices. Okay, they want 2022 prices, but we're in 2024 with 2024 leverage, 2024 money. Okay,
right.
And so the deals are harder to identify. You got to spend more time with the buyers or the agent. Real estate agents have to spend more time with them. But a lot of those deals are out there. I'm doing them. Okay, and I'm thinking there's more of them if I'm doing two. If I did two like that. Okay, that's not the only ones. And then you got Pace Moby that's out there that's promoting sub-2 deals. That's assuming these mortgages, and we're doing a sub-2 mortgage. We're working on our second one now. One was internally, and there's that too. People are they can't pay their bills, but they got great mortgages. Okay, they got mortgages at 3.5%, 4%, 30 years. I want that.
Right, yeah.
And because I know what I can rent it for, and I'm dealing with somebody that has no idea about the rental market, but they want out. They want some relief, and therein lies the opportunity.
No, Cy, thanks for coming by. Thanks for doing the podcast with us. I wanted to kind of change it up, the pace a little bit of our podcast, into introducing some personal friends that I have that are involved in real estate business, and pick your brain a little bit and share some of the information and experience that you're getting with an audience, because I find that a lot of people are looking for the real estate game. They're doing research. You have Grant Cardone, you have all those guys that are selling the programs, books, talking about it on TV all the time. So I find that a lot of people are getting into the real estate game, but they're not really prepared for it, because the market shifts. You don't have enough assets. You kind of playing the game and there's a lot of 100% financing talks. And I've seen that game before in 2008. We're in a different planet right now. We don't have fraudulent mortgages anymore. Back in the day, you could fog a mirror and qualify for a loan, right? Now you need to put a down payment, and you need to, like we talked about, build your resume with the bank before they can leverage at 100% when the house is appraised for more. But me being in a mortgage business for 23 years now, we've seen a lot of different markets, from low rates to the highest rates ever in the last year or so, and how much that affects the cash flow of the business. And you have a background of landman, and now you're in the real estate game. So I wanted to get your input and get you to share some of the stories.
So I come from the oil and gas world. And I come from the world of true high-risk exploration in the upstream drilling in South Louisiana. I have a history. We drilled 13 oil and gas wells, okay? And 2017, we did a big deal, okay, where I ran into a windfall of money. Okay, 2020 pushed me out of the oil and gas business. Okay, all goes to negative 34. I can't sell oil anymore. It's no use for me to go even try to prospect for it. Okay, so we got into real estate in 2017. I didn't buy my first apartment complex till 2020. But we had reached a point where, it's all fun and games. We had 13 houses, but my business partner wants to go bigger. But we got to that point where it's like we're doing a lot, but I want to see more upside. We're buying this property for, I think it was $760,000, getting a loan for, and I got my brothers in on it. Okay, I come from a huge family. I'm a family of 5 boys, 1 girl. Okay, and we had a success. We paid attention to what we had to pay attention to. Okay, I'm disciplined on that side where I take the project seriously, and I take my money seriously. And we had skin in the game. Okay, and so if I can instill any confidence, if you adhere to the different tactics and you pay attention to your asset, you're gonna be all right in real estate if you get in right now.
Yeah,
you get in at the height of the market.
Interest rate. You can apply those principles from oil and gas into real estate, where you don't have to deal with the crookeds and all the, it's a lot more solid, more stable, I guess, and always appreciating an asset. And if you manage properly and you improve the tenants, and then your properties go up, right? So on the commercial side, everything's tied to the amount of rent, right?
Yes.
I know I purchased our office where we are now, and the realtor always tells me you can rent for this much, then your building is worth this, And it was like, whoa, that's a lot of appreciation based on, just bought the building 4 years ago,
And I've seen that. Actually, I'm seeing the headlines of that example in the commercial retail side, of commercial space on the retail space, and these big, I don't know what's the correct nomenclature for them, but the big luxury. Like Louis Vuittons and stuff, they're buying up commercial space because they're playing the same game I'm playing. They're playing the same game all these real estate operators are playing.
Right.
I'm gonna be able to refi this thing 5-10 years from now, and I'm gonna make, if I can improve the efficiency of that space, okay, the revenue coming off that space, I'll make all my money whenever I refi. And they know they're gonna go in and they can put a team on it to market the space, operate within the space, but they're gonna underwrite the deal to the new debt service, the new interest rate, and they're gonna buy it like that. So when you do that, that's the opportunity. It's just to get that seller to make the deal, happen. And in low income is where I started, and that's where a lot of the audience that you talk to or I talk to, that's where you're going to start. But I'll educate you because, like I just said, I'm just getting warm. I'm just getting warmed up, and I'll find everybody gets to a point. If you have all the time in the world, or you don't have the time in the world, I can deal with you. But you're going to get to a point where you have decision fatigue, or you're worn out on your capital. Okay, and you run to your risk tolerance of how much money you want to put in this type of market, and then it's time. Okay, I need a partner. Okay, and I want you to think about me, but I want you to be able to. I'm looking at it as like that's how you build part of the trust. I'll tell you all, that's a beautiful thing about real estate. I can tell you all my secrets. It's still going to take you 3 months to 4 months to do it by yourself, but you might refer somebody that don't have the time. I deal with doctors, engineers, a few attorneys. Okay, and they have their badass practice, but they don't have time to get into real estate. That's where I like to talk to those guys too. What I recommend to guys is get a buddy. I got a twin brother, so I'm a natural partner. Okay, it comes natural to me. I'll identify what you're good at. I know what Kurt's good at. That's my twin brother. I know what I'm good at. Okay, and so we operate pretty well together. Your partner will help you make a decision, because what I've learned, even at our rate, even with my brother's expertise, he'll come to me and he'll underwrite the deal and say, okay, this is what I got. Because he pitches me first. And I say, okay, what we were looking at. And at any given time, he's thinking, he might forget about this episode where shit hit the fan and we had to spend you're going to have losses. Yeah. But that's where you learn.
For somebody that wants to get on a real estate investing game, what does it take? How much money do they need to do to do the first few deals to partner up?
The thing is, what I think is we all have smart professional friends, I guess, but you need somebody that's hungry.
Mm-hmm.
Okay, and to me, what I start to pick up on now is somebody with energy. Okay, and he's got a chip on his shoulder. Okay.
No, I agree 100%. Somebody with a chip on their shoulder is a good definition.
But what I motivate the young guys that I run into, that I'm not going to get to their business. I mean, we're not going to do business yet, but I challenge them. Don't read another book. Go buy a property. And if it scares you, it should scare you. Get you a battle buddy. Okay. Yeah. And then y'all figure it out. Y'all be honest with each other and get your experience. And then once you buy a single family home, you go and you try to buy the multifamily. And with the multifamily, you can hire people. Okay. But to get in, you could get in wrong. You can get in a screwed up acquisition, and you're going to be all right. You got some outs and some great headwinds that are coming up. So that's how I would answer
refi
that.
boom's coming.
Refi boom is coming.
That's going to be good.
I don't need it to come. I don't need it to come next year, the year after that, or 5 years from now. Whenever I go, I plan to own it for 10 years. Okay, and with my partners, I plan for them for 5 years. But I'm young. I can operate all this stuff.
Yeah, once the refi comes, cash flow.
Pretty much, man.
Amazing.
My equity position doubles. I run my numbers, and I do a demonstration with my guys, and I show you what happens with the cap rate whenever it goes down. And like, oh wow, it's eye opening. Yeah. And like, oh, that's why you do it. Yeah, that's why I do it. I didn't make it up.
What's the end goal? Buy X number of properties and then sell it down the road? What's the end game? Keep buying everything.
There's a line. There's a line. There's a line, and I think it's it's Wall Street too. When he's like, "What's your number?" And he says more. That's what I look at. It's more. It's like I think my guys, everybody, even the guys that work with us, people get off on working as a team. Okay, why stop? Why stop? There's no retirement in my book. Okay, look at Grant Cardone. He's a billionaire. Okay, now he wants to be a bank. Okay, why stop, dude? Why stop playing the game? I stopped playing football a long time ago. I stopped in the military in 2008. Okay, I miss it. I need some excitement. You don't want to stop.
Yeah,
and we see that all over Instagram, Facebook. We see that. That's why those guys don't stop.
We're talking about like the attorneys, the doctors that have a successful business. They don't have time to go buy investment properties. So what I like the most about your setup is that, hey, here I'm, this business making a lot of money, doing well, successful. I'm going to put the money from here. Hey, Sai, here's how much money I have to invest. What can we do with this? And then your team runs with it, and then it returns. This wheel spins, and then you get this wheel to start spinning, and that's how you create wealth.
Yeah, a lot of people don't think about where they put their money. They think it's safe in a bank. Okay, go try to get your money out of the bank once you put it in. Big money. Okay, it's going to take them a little while to get to it. It might take them a week, might take them 2 months. What I recommend is you got to find a lot of guys like me, okay, that have a team, and they out there and they take their market seriously, and they know their market, and they have position in the market already. You stick money in the bank, and you leverage the money that you stick in the bank, and you go buy some real property. That's just one of the benefits. You can make money in cryptocurrency. You can make money in the stock market. I can control this. I control my asset with real estate. Is what they'll say too.
Cool.